Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 9th, 2021. I should note lesson number 2 of the protreptic coaching I'm going to do with Jens tomorrow morning. And then I'll get that published and posted into the protreptic coaching course for my accountability partners by tomorrow. We'll be examining the methods of protreptic in lesson 2. We covered the background in lesson 1, and we elicited 2 values that I want to explore tomorrow: duty and identity. So we'll take a look at those tomorrow. For those of you keeping score at home, in the new protreptic, the reading assignment is pages 69 to 90 in the new protreptic. So I'll get my notes posted later tonight. Let's see. Monday, I'm doing a podcast for Dr. Tharp and the Tharp Institute. I'm going to be talking about due diligence and what it looks like, that the secret sauce is not secret, it's only rare. And it's an acquired taste. But it turns out to have everything you need to thrive. I'll be using Ken H. and Luke Crockford's work as great examples, also that of Griff Cooper and Phil Wu in the early stages of their due diligence in preparing note sheets for us. And that's going to be the message on Monday. I also have a podcast coming up with Angus Fletcher tomorrow. We're going to be looking at creativity across a couple different domains. We're recording that for our military podcast for the Army, and that's going to get published sometime this weekend. And then also with our good friend Bob Rourke, he's hosting Angus and I talking about creativity for his business CEO roundtable. It'll be in probably an hour and a half worth of going back and forth between Angus and I on the theory and the practice of creativity in a variety of settings. We're each going to ask each other a couple questions to answer, and then make some observations from our experience, and see where that heads. That should be a lot of fun. All right, let's look at the market health check today. So yesterday, you may recall, the market looked like this. We had seen obviously the big sell-off from, the collapse of the Bollinger Band mean. It got all the way down to Z2. That was followed by a nice little recovery that took us up into yesterday's high. As it was approaching the 10-day high and the RL10 peak and the PSAR flip, we said, this would be a natural place for this thing to start selling off, or a natural place for it to continue. And so we marked that off yesterday as a critical state, and that we were going to be ready to go in either direction. Pete asked me where my stop would be. I said I thought the best place would be like the 1-bar low. And then today, what we had was a slight gap down, a bit of a recovery intraday, but could not break through yesterday's high, and then it started rolling over. And I just took it here when it made a new low intraday and exited basically any swing position in the market that was still open. I went ahead and took this exit rather than waiting for this exit. It closed at a new low compared to yesterday's low. Now, it is still above the Bollinger Band mean, but I just felt like I wanted to capture the move that was there. And, I'm satisfied with that, the way we played that. This feels very much like Lisa's observation on the swing, the swing system. Now, what she does is trades from the RL10 crossing the baby dragon until it crosses on the upside. However, this is one where the rollover had already started and the move was so strong that the RL10 was still lagging a little bit. You actually have to drill down to the 2 hour or the 1 hour to really see the way that channel is unwinding. And so that made it pretty easy to make that decision. So as it stands right now, I'm just looking to see where this rascal is going to find support. Is it going to find support here at the Bollinger Band mean? Is it going to get down into the width of the drag? I've shaded this little piece right here to show the the dimensions of the dragon. There's the southern skin. There's the upper skin. Here's the spine. So you can see that a little more easily, I think. Today, the hull rolled over and is now warning us to the downside. And tomorrow is a Friday going into a weekend. Well, I guess every Friday does that, doesn't it? Friday heading into the weekend. So I wanted to treat tomorrow as Tactical Friday. And I wanted to just make bank on the swings from this week. So that's where we are. Postured to exploit intraday tomorrow. All right, let's look at the market. Big indexes. Oh, excuse me. Long day. S&P minus 0.68. The Qs were worse at 1.5. The small caps worst of all at minus 2.25. We saw that yesterday with Chi-Wing Chong's relative strength on the RL slopes that the Russell had been the weakest, I should say. Emerging markets were fractionally better than the S&P at only minus 0.5. The Dow was a sliver into the green at 0.03%, and Treasuries made a 0.56 recovery. Haven't broken through 150 yet, but if we see more weakness tomorrow, that feels like the easy play. To take advantage of the hesitation. The daily summer feels good. You got Apple on a daily summer. You have wood on a daily summer, and it's actually looking a little stronger than cut, his wooden counterpart, which is still on a daily winter. So wood might now have a little bit of the advantage. Okay. All right. So let's take a look at the sectors that outperformed. We had wood was only down 0.56. Agriculture and materials minus 0.56. Finance off 0.2. And we saw yesterday in Chi-Wing Chong's RL30 slope comparison that it felt like finance had rolled over, starting to recover faster than the others. So this might be another stealth evidence of that. Mexico 0.15, Staples 0.27, VIX 3.16. That's kind of a muted gain in the VIX. That's not all that, that's not a reflection of panic selling right there, if I can say it that way. All right. Let's check. Let's see the symbols that outperformed. Alcoa almost 3%. TX, the steel company, 0.4. John Deere, 0.24. Apple, a fractional loss. Microsoft, fractional loss compared to the S&P. So not much to choose from in there, if we're being honest. I think Mexico. I would also say if there's more weakness tomorrow, XLP or Treasuries could have some juice, and maybe the metals. You got the steel companies there with and metal companies with Alcoa, TX, John Deere. Those seem to be company specific, because you notice way down here, U.S. Steel was off 2.3. So that feels more like company level buying rather than the sector. All right, let's look at underperformers compared to the S&P. And there are many. Energy, lumber, tech, wheat and precious, 1.45. Blended commodities, 1.5. Marijuana, consumer discretionary, oil exploration, and the FANGs, 1.8. Brazil and oil, 2.6. Lithium, moonshots, commercial real estate, clean energy, all the way out to 3.58. Biotech, ARC Genomics, both off 4.2 and 5.2 respectively. Blockchain, 5.3. ARC Innovation, 5.3. Let's see, Bitcoin, 6.3. Yeah, and then the whole crypto disruptor complex just getting smashed with Ethereum, Coinbase, Bitcoin, Robinhood, Tesla, large cap blended crypto, Devon Energy off 5.7. So that's going to be a short term trading opportunity in my view. If we see more strength in energy tomorrow, it would be normal to see Devon respond to the upside. So let's put Devon on a short string tomorrow and be ready to trade that one hard in either direction. I like that one. Okay. Only one symbol to look at. I will tell you every day that if you want to improve the fastest, post your chart for feedback. If you post a chart to get feedback, I will give you feedback. If you mark it up and put your lessons learned in there, then I will give you better feedback. Because I can give feedback on the patterns I see, but also on your assessments. That's the best way to get the most feedback. When you make it easy on me to give you feedback, it's easier for me to do that. I'm just saying. Oh, let's see. So this is, here's our CLF. 2 minute. Yep. All right. So let's see here. Here's the big gap down. Sells off. I might invite you to start looking at this earlier, Luke. You're using kind of a standard entry box or a standard risk box like that, and I think you tell me if I'm wrong. I think you're waiting to see the adverse move and then entering. I think you can start thinking of the gap as that box, and then that might let you get your entry in here as it's falling on that first piece. And then that would be easier for you to get not this exit, but maybe something in here where you could cash a winner. This is pretty good on the stop and reverse, and that 1.4 more than covers for the loss. Still a little slow on this. This is, from the peak, that's 1, 2, 3, 4, 5, 6, 7, 8 minutes, or 8, that's 15 minutes of pain and suffering. You do get it as it crosses the dragon. I think if you're going to wait that long, then this entry short should be up in here then. If you're going to give it 8 bars, then stop and reverse. If this was, 1, 2, 3, maybe wait till it gets through the dragon. But once it's through the dragon after 8 bars of weakness, and especially after this big sell-off to open the day, then you're looking for a retracement to the Bollinger Band mean anyway. So I think you can enter here rather than there. Having said that, this is still getting paid. Some grinding and chopping. This one feels like it's late getting in. It feels like you wanted to be, or maybe that's where you did get in. I'm sorry, you did get in there. What I meant to say was that's where I'd look to get in. That's a pretty good exit. That's worth sticking around for, because if that holds, you have a low, a higher low. If that holds, then this is going to continue to go and probably back to here. So I like giving it this room in here to try to get up to there. So I don't have any problem with that. I think that's fine. This is a real good stop and reverse. Maybe we gave back a little bit, but still 0.7. That's all right. This kind of all grinds together, but the last two trades collects to a 1.7. That's a pretty good day on when 80% of it was this tight grind, and you're still coming out of there with almost 3, and you're getting the big pay on the moves that were there. That tells me you're staying connected and you're taking the shots and you're managing the risks in here. So I like all that. Daily report. Still bullish, volatile. We got a little bit of weakness in here from today's rollover, the first early warning. Risk C starting to bottom out and leaving room for an upside move. So still abnormal and still risk off. McDonald's and Diamonds. Johnson & Johnson, United Health. Tons of dojis today in the Dow. That's indicative of a turning point, critical state. You got Merck on 9-1, Dow Chemical at 5-1. And because it was a big red move, a big red box today, and it's been underperforming the Dow for every measured time period, that's a reasonable target for the downside. I mean, if there was ever a place to start stalking for weakness and losers, if the market rolls over, that would be my first look. And the reason is, if it's losing big when the rest of the market is grinding up, if the market starts rolling over and going down, who's going to then say, oh, well, now that's going to go up? No, you wouldn't. You would just say, well, of course it's going to get smashed even further. So that's DOW should be on your short list for framing shorts. Let's frame them before you need them. I heard such a good line today. We were in the oral defenses for the military officers, and they all had to do a strategic case study. And one of the guys was studying an insurgency campaign, and he was comparing a Western power against a third world. I'm not going to say primitive culture because they won, but a third world culture. And his line was, with respect to how long each side was going to be committed, they said, this side had the watches, but the other side had all the time. All the watches versus all the time. And I thought that was just a marvelous, marvelous idea. So frame them before you need them. Plenty of auto framers. And by the same token, this is one where silver, and by extension, wheat and precious metals, we should be looking at that, posturing for further weakness. Lots of good auto framers to work with here. All these better than 2-to-1. Merck, DuPont, and silver look really attractive. And I would also say, given the strength in treasuries today, if we see another day of weakness, that looks like an opportunity there, for with $3 or $4 upside in treasuries going into the weekend. S&P was on a pinch, as is energy, ready for a pop in either direction. I like it when Microsoft is pinched. The Dow is pinched, relatively, along with real estate and treasuries. So let's be ready for those. Brazil is in a posture as well. A great hybrid frog opportunity. Tons of winters. Do not neglect the weather. This market is still very fragile. IBM, McDonald's, Johnson & Johnson, the only sign of life today. Mexico, the unusual strength today. That's a frog champion for intraday and swings. And I think that's everything we want to see today. This is the natural place for this thing to roll over and find weakness again, to come down to 450. That would be the least surprising thing. Yes, an upside is possible. And yes, a grinding sideways is possible. The least surprising move would be back to 450. Not allowed to be surprised if that happens. Not calling for it. Don't want it to happen, but I'll trade in that direction if that's what it takes. All right, guys, that's everything we got for today. Let's pack it up and prep and get ready for tomorrow. And thanks for your kind attention.